corporate line on the show. So let's begin trading on with a corporate discussion. Zen Technologies recently reported their Q2 numbers. The company saw its revenue and other income surge. However, EBITDA margin came under some pressure. We are now joined by Ashok Atluri, who is the Chairman and Managing Director of Zen Technologies, to discuss the Q2. Good morning, Mr. Ashok. Thank you so much for joining us. First up, after a slightly tepid Q1, you've seen a much better Q2. Are you now on track to go ahead and meet the FY25 guidance of at least 900 crore top line growth or top line?
Yes, absolutely. Yeah, we are very sure that we will be able to, meet the 900 crore target. And we also feel that the first quarter was reasonably good, and so was the second quarter.
Okay, so you'll be able to meet your 900 crore rupee guidance on the top line, and EBITDA margins is what you'd guided at 35%. Is that achievable,
yes,
or you will cross that? Because on the first half mark, you are already above that at 36.8%.
No, I think we'll stick to the conservative projection of 35% and hope that, we touch that, yeah.
Okay. Mr. Atluri, now that we have spoken about P&L, I just wanted to touch upon the balance sheet as well, because your operational cash flows declined on a YY basis in the first half. The receivables had gone higher. How much higher have they gone? Can you give us an indication of what the receivable picture is looking like? Is this something that would go higher in the second half as well, or come back to normalized levels?
No, we are getting the realizations are very good at this point in time, and even though the balance sheet is showing the receivables have gone up, the fact is that as we getting into the second half, the realizations are coming in. Government is not holding back unless there is a valid reason. So we think that by in the next couple of months, most of the receivables will be down. We would have received.
So what is the average receivable days for you, Mr. Atluri, and will that be the number we'll see by the end of FY25?
So we have been around 150 days, almost 5 months. We expect that this will continue into the future also, plus or minus 5 or 10 days, but not more than that.
Mr. Atluri, when you're talking about the domestic order book, the domestic part of the business, you're sounding very confident. Now, talk to us about exports. What was the export contribution in this particular quarter? FY25, earlier you had given a guidance of close to 300 crore. Are you on track to achieve that?
Yeah, we are on track to achieve that. I think that because that's the order execution that we currently have. And, again, the percentage of export that we have done is around 13% this first half year. And we expect that to go up in the second half. It will be, I think it should be around, probably around 30% or so of the whole order book position that we execute out of 900 crores, yeah.
Okay, so order book, what is the guidance that you're sticking with? As far as Q2 was concerned, it appears to be slightly muted. Was this because there was some slowdown as far as spends or awarding new contracts was concerned? And also give us a sense of, what are the new orders or the contracts that you're executing versus what are the annual maintenance contracts you would be executing?
So again, we are doing about 8 to 9 crores quarterly for AMCs, and we think the order, we have all, from the beginning, we have been saying it will be towards the end of third quarter and the fourth quarter that we'll be getting the, substantial, the order book replenishment that will be happening. And we still are confident that, the order book replenishment will happen then. Yeah, and again, if you remove the, 35 to 40 crores out of the 900 crores, then we'll be having about 850 plus crores of equipment order out of the 900 crores.
Okay. Mr. Atluri, the other thing that the street is watching out for in terms of some execution, because you've already spoken about how you're looking at inorganic opportunity. The last time we'd spoken, you said you do have 100 to 250 crore rupees of 2 to 3 acquisitions which you're looking at. Anything that will be finalized in this calendar year or this financial year? And if yes, will that start, adding to your growth from FY25 or FY26?
So we think that, in this financial year, definitely we probably will be able to show some acquisition happening. We are reasonably confident at this point in time. And if we do acquire, I think there'll be some incremental, addition during FY26 for sure. But FY27 will be the big year for the acquisition, because at that time the integration would be over and we would have introduced them to our complete value chain, including our, our customers, existing customers. So FY27 will be big for any acquisition that happened during the year.
So what is it that you've kept in your kitty as far as the acquisitions are concerned? And initially, where will the acquisition targets lie? Will they be in the simulator space, or what kind of space will they be in? And FY25, what will be the likely size of the acquisition you're expecting to close?
So, our target size is between 100 to 300 crores. So, we are evaluating, we are not sure which one will get concluded. And we think that the acquisition will happen in two spaces. Again, electronic warfare, which is basically anti-drone system and adjacent spaces. And the second one is simulators. So these are the two areas that we are looking at. Again, because we have strengths, but if there are any gaps, like, getting into Air Force simulation or something like that, that's another thing that we are looking at. So with these, again, not very diversified acquisition. It is, even though it is inorganic, but it is building the strength of the value chain that we currently have. And I think the acquisition will definitely add a lot of value to Zen's current portfolio.
Okay. All right, Mr. Atluri, thank you so much for joining in today. Pleasure speaking with you. And that's the word coming in from Zen Technologies, maintaining their guidance for FY25. Receivables will also come down to 150 days. We'll do one thing. We'll slip into a short break now. Up next, we'll discuss what's buzzing in the commodity space with Manisha Gupta. Stay tuned for that.